As an accountant, managing cash flow in my business can be a challenge. If you're a business owner who has up and down cash flow, you're worried about how you're going to make payroll at the end of the month or even pay yourself, this simple system will help. My name's Rehan Moghul. I'm a chartered accountant and the founder of Sidekick Accounting. I've helped hundreds of business owners make more money and pay less tax. And in this video, I'm going to show you a simple system of using separate accounts and pots to manage your cash flow so you're never caught off guard. I'll talk about each pot I use, how much I top it up by, and when. Let's start with why you should separate cash into separate pots in the first place. The problem is if your bank account looks like this, you have no idea what's coming out tomorrow, next week, next month, or even next year, and therefore no idea what you can actually afford to spend today. You'll feel like you have more money available than you do and therefore tempted to spend it, or you'll find yourself worried about what will happen if you spend it and therefore you're not investing enough and you're squashing the growth of your business. By creating separate pots or accounts for different purposes, you can really easily see what's left over for you to spend on those discretionary things and what's put aside for things that are non-negotiable. The first pot I use is for corporation tax. Each month, I estimate my tax bill based on the profit that I made, and I put aside 25% into a separate pot. That way, when that tax bill arrives, even if it is 12 or even 18 months down the line, I'm not scrambling for cash, I'm not worried, I just pay the bill and move on. If there are tax efficiencies that are available that we weren't aware of at the beginning of the year, those go through and we have something left in the corporation tax pot which can come back into my main bank account, and I call it a bonus. Next is the VAT pot. This is crucial for any VAT registered business. The VAT you collect is not yours, it's HMRC's, and typically they want it back every quarter. Keep VAT completely separate to any other cash. The percentage that you should put aside depends on your business and the type of supplies that you make. For us, we deal primarily with UK businesses and therefore all of our supplies are VATable. That means it's reasonable to expect that 20% of all of the cash coming into our bank account is VAT. We can then assume based on previous returns that we claim back 2 to 3% of that 20% in expenses. So typically I'm topping up my VAT pot with between 17 and 18% of all cash that comes in. If you run a manufacturing business or a retail business, that percentage will be different for you. But typically for a service-based business that has UK clients, putting aside 17 to 18% will have you covered. Then there's the accruals pot. This is particularly useful if the timing of your cash coming in and cash going out is mismatched. For example, most of the cash from my clients comes in at the beginning of the month, but we don't pay payroll till the end of the month. Therefore, we have typically 3 to 4 weeks of time between receiving the cash and knowing it needs to go out. I set aside in the accruals pot any money that I know will be going out this month and therefore needs to be budgeted out of the income we received earlier. Then there's the Amex pot. I spend everything I can on my Amex, so meals, travel, subscriptions, absolutely everything, to accrue points. And I make sure that I pay that Amex off in full every month. That way I'm benefiting from the points, but I'm not incurring any interest or accruing any debts. To make sure I can afford to pay that balance off at the end of the month, I put aside whatever my statement balance is for the previous month. That means that I'm able to pay it off without incurring any interest and without having any debt rolling over. This means my cash position is matching the expenses that I've already paid for on my credit card. The fifth point is all about paying myself. I put aside money in line with my tax strategy to a pot called profit payable. This is a non-negotiable expense. I have to put that cash aside and I will pay myself it at the end of the month. It's easy to get caught up in the running of a business and you get to the end of the month and there's nothing left to pay yourself. You're going to ensure that you're rewarding yourself for the hard work that you're putting in. Then we get on to the longer term savings pots that keep the business stable when the economy goes down or other unexpected things happen. The first of two savings pots are my reserves. This is a safety net for future investments and future expenditure that I might want to make in the business. I top it up with varying amounts each month, but typically 20% of what's left after all expenses. That money is then spent periodically on things like new equipment, hiring a new team member, or investing in growth. It also means I'm able to jump on opportunities as and when they arise, moving really quickly without worrying about where the cash is coming from. The second of the two savings pots is the emergency fund. My emergency pot holds 3 months of fixed costs. This provides a cushion for the unexpected, whether it's a significant drop in revenue or a large unforeseen expense. This buffer just helps me sleep better at night, knowing that whatever happens, we can continue to run for 3 months. And finally, after you've made all of those movements and transfers, what's left is what I call your operating pot. This is used to just cover the day-to-day expenses of running the business. I adjust this pot as needed, making sure that there's enough in there to just keep the business ticking over. If there's excess in there, I might put more in my reserves, or pay myself more as a bonus. So that's my system for managing cash flow as an accountant and as a business owner. It's simple, but it works, and it beats leaving everything in one place, hoping for the best. If you found this video helpful, give it a thumbs up and subscribe to my channel for more tips on how to make more and keep more.